We also come across random bits of advice for personal finance in some. We may have been following blindly, but not all advice is practical. Before we get into these, please hit that notification bell and subscribe button to know more videos just like this one. Welcome to Fortune Figures. Here are the 10 financial advice you should never listen to. Number 10. All debt is bad. Maybe having high-interest credit card debt will never make you rich. But is all debt bad? An expert said that when debt is used wisely, it is a great resource to have at your disposal. When you use debt to finance important purchases in appreciating assets like housing, it acts as an enabler of wealth creation. Good debt is often exemplified in the old adage, it takes money to make money. If the debt you take on helps you generate income and build your net worth, then that can be considered positive. So can debt that improves you and your family's life in other significant ways. It is also helpful, especially in education. Like for many lower to middle income Americans, an investment in a college or technical degree can often pay for itself within a few years of entering the workforce. However, not all degrees are of equal value, so it's worth considering both the short and long-term prospects for any field of study that appeals to you. Number 9. To make money, you have to worry about money. Overthinking always limits creativity. The more time you spend thinking about money, the less time you have to think of the next great idea that can make money. Financial stress is a significant problem for many people all over the world and can become a leading cause of unhappiness in our lives. No matter why you feel like you are worrying about money, there are several steps you can follow to get your financial habits and mindset under control. The first thing you need to do is show yourself a bit of compassion. A lot of people are unnecessarily hard on themselves when they are trying to figure out ways to address financial concerns. You may feel like you have gotten yourself into your own mess, which could lead to a dangerous cycle of self-deprecating behavior. Instead of focusing on everything you did wrong, it is important to take a deep breath. Get yourself in the right frame of mind and tell yourself that this is something that you can fix. If you can stop judging yourself, you will have an easier time making the right decisions. Number 8. Financial success relies on past performance. Past results can be helpful when analyzing an investment, but it's important to look at it in a long time horizon. Past returns can be a helpful metric when choosing assets. However, return shouldn't be the only aspect an investor considers. Firms that manage assets have to inform you that all investments carry some risk, even those that are safer or more successful. Past returns can be helpful when analyzing a stock or fund, but almost all investment literature warns potential investors that past performance is no guarantee of future results. Number 7. Prioritize security over market volatility. The stock market tends to go up in the long run. However, this secular bull trend over time has been punctuated by bouts of bear markets and volatility, some of which have been substantial and difficult for investors to face. Volatility refers to the speed at which prices move in the market, often associated with large swings in either direction. Volatility refers to both the upside and downside movement of an investment. Your list of goals may include saving for retirement, buying a house, starting a business, paying education costs for your children, or charitable giving. Number 6. Getting a tax refund is bad. Truth is that there are many different things you can do with a tax refund to improve your financial life. Yet many financial experts said that getting a refund is bad because it means people are giving a free loan to the US government throughout the year. The argument is that people are simply getting back their own money they shouldn't be sending to the government to begin with. But for many people, getting a tax refund is the only way they'll be able to save large amounts of money every year. According to a recent survey, 69% of people have less than $1,000 in savings. That means that if a tax refund is the only way that forces people to actually save, then it's not a bad thing at all. A tax refund is also a great opportunity to pay off a chunk of credit card, student loans, or other debt that you may have. Number 5. Build a nest egg as soon as possible. A nest egg is a financial term for a large amount of money intended for a specific purpose. That money can be in cash, savings, or investments. Traditionally, the term nest egg is used when discussing retirement planning. If you have kids, you might want to help them cover this difficult expense in college. Although student loans can be suffocating, they are still available. There are no retirement loan options. However, if you have a large enough nest egg, you might want to consider helping your kids with the cost of college. Building your investment portfolio and growing your retirement nest egg is a long-term process. You don't need to rush into making brash decisions or be forced to take more aggressive positions than what you're comfortable with. By adopting good daily habits in your lifestyle, you can make better decisions for your career, health, family, and your wealth, including your investments and retirement. Number 4, your home is your most valuable asset. When it comes to income planning and retirement, people are surprised to realize their home as their largest asset doesn't actually bring them any income at all. Some people have half of their net worth tied up in a house and might find themselves asset rich but cash flow poor in retirement. Your home is an investment, but it's not an easily realizable or income-generating asset. Home ownership may be the right move for you, but it depends on your circumstances. One thing rarely discussed in the rent versus buy debate is opportunity cost. If you have enough money for a healthy down payment on a home, that's great. But there are other investments you could put that cash towards that will pay off sooner and maybe better. And while property is historically a sound investment, it doesn't always work for everyone. Ask anyone who's been forced to sell in a down market and left with negative equity. For most of recent history, the stock market has performed much better than the housing market, despite booms and busts. Number 3, it takes money to make money. We may have all heard the phrase, it takes money to make money, but is it really true? More frequently, first-time business owners without a clear budget in hand spend a lot more money starting their business than it is necessary and more than they'll ever get back. If you don't have money, it's because you don't have money. A philosopher might call this circular reasoning, but it's scientific fact in the financial world. Number 2, having a normal routine will make you richer. An expert once said that the world's wealthiest people didn't become successful because they were coloring inside the lines or doing what everyone thinks they're supposed to do. Instead of sticking to the same old routine, realize that you can change your life in meaningful ways that will make you happier and more successful, starting today. If you want to, you start reinventing your life in just a month. That it's possible hasn't been scientifically proven, and plenty of entrepreneurs have done it before. And last but not the least, number 1, never use credit cards. Personal finance experts spend a lot of energy trying to prevent us from using credit cards, and with good reason. Many of us use credit cards irresponsibly and end up in debt. However, when used responsibly, credit cards can help you earn rewards that you can use to travel inexpensively. This is especially helpful to families looking for ways to afford vacations. However, the smartest way to use a credit card has always been to pay your balance in full every month to avoid paying interest. From a practical standpoint, the cardholder isn't incurring any debt, but that is not how the credit agencies will report it. You may even use it for cashback and travel rewards that can make every purchase more valuable. These reward cards earn points and miles that you can redeem for cash, usually in the form of a statement credit or direct deposit to a bank account or discounted travel. Credit cards are used widely, but there's also a lot of misinformation going around about them. By understanding the facts, you can make the best decisions about your use of these powerful financial instruments. Alright, that's it for today. We hope you enjoyed today's video as much as we do. What other financial advice do you think is just a complete myth? Share your thoughts in the comments section below. Please don't forget to like, share, and subscribe to our channel, Fortune Figures, to keep you posted on our latest and trendiest updates. Thank you so much, and we will see you again next time.